All right. Looks like we got some, let me just make sure. Okay. Yeah, looks like everyone's jumping in. All right, we'll give everyone a couple of minutes here to settle on in, and then we'll go ahead and get started. Bob, always a pleasure to do these webinars with you and everyone else at the GBQ team.
Yeah, we're looking forward to it. Always enjoy it, and especially a very timely topic given what's going on in the world.
Yep. Yep. As much as everyone doesn't find it the most riveting topic of conversation generally, but I think it's something that's, critical for a lot of companies to consider as they maneuver through the rest of the year and try and plan for things for next year as well. So I think
That's
we've
exactly
got,
right. It's not the most riveting topic, and there's not a lot of new things out there, but other than the tools that we'll probably talk about, but it's something that everyone pays attention to every day.
yep, for sure. For sure. And it's, no different than trying to balance a checkbook at home, but, just making sure that all the money's in the right place for everything for the rest of the year. So we've got, I think, we've got a good amount of people here. We'll give everyone maybe 30 more seconds. Let me get one of these initial poll questions put out there. Basically, we're just looking to see what kind of accounting software everyone's utilizing, what type of contractor everyone is, just so if you guys can take a second just to answer that one. And then as we get a couple more people rolling in here, we will jump into it. Okay. All right. Let's see. Okay. All right. So let's go ahead and get started. Bob, let's formally introduce ourselves to everyone on here. As I'm sure you guys are familiar, my name's Denver. I head up the implementation team here at ProNovos. Been here for about a year now, and it's always a pleasure talking with some of our CPA partners and anyone that we have on these weekly webinars. So today I would like to introduce everyone to Bob Biehl over at GBQ out of Columbus of Ohio. But Bob, I'll let you give us a little information about yourself here.
Yeah, thanks, Denver. Well, I'm Bob Biehl, as Denver said, and I head up GBQ's construction practice. Probably represents 75 to 100 contractors. Live this stuff, breathe this stuff, and really all I do. So I'm involved in a lot of different trade associations. So I tell everyone I can't hammer a nail into the wall, but I know a little bit about construction accounting and some of the topics we'll be talking about today.
Yeah, I can echo that. I'm more of a hold the other end of the tape measure kind of guy myself. So I worked with my brother for a little bit, and that's about as much benefit as I could offer him. But when it comes to some of the financial stuff and planning and talking through some of the benefits of cash flow forecasting or just financial literacy, I think that's where we better shine, Bob. So let me I want to actually open up a first question to everyone who's on the webinar here. So basically just wanting to see what you guys are doing as far as cash flow forecasting, right? If you guys are doing it within your accounting system, how far out are you guys doing it? So take a look at that poll. I'll go ahead and read off some of the results here, and then we'll talk it through, because I think it's the one thing that, like we were mentioning, it's a very important topic of conversation, and just making sure that we can plan accordingly for resources. Is it better to, we've got a lot of extra cash on hand, maybe it's better to invest it into some equipment, or there's a ton of different ways that we can spin it. But it's looking like, and Bob, I'm sure you can probably echo this, we got about half of the people answered, and 80% of our answers say they're doing cash flow forecasting in Excel. So or no formal cash flow forecasting. So
that's what both those are what I'd expect, right? I would still expect that while the definition of no formal cash flow is probably an extreme, I bet at least most of my clients probably are no formal cash flow forecast, right? They're looking at daily, weekly, and all that stuff, but they don't have a a 13-week plan or an annual plan, but the ones that do are doing it in Excel.
Sure. Yeah, and maybe no formal software, but I'm sure there's monthly and quarterly and yearly meetings that talk through the finances and where we plan to be. But having some sort of tool that can track all this is definitely beneficial. When looking at the current forecasting of everyone who's put an answer in, typically the most common answer is we're looking at less than 3 months or right about 3 months. I would say is about 70% of the answers as far as how far out we're doing some cash flow forecasting. So Bob, does that seem pretty?
It does. I mean, especially for the most part, people are looking at a 13-week forecast in a lot of cases. That's what the banks and bonding companies want to see, unless, there is a bigger plan that you're going out to the market for, some additional financing or something, then I typically see something for an annual basis and maybe even projected out a couple of years. But those are a lot more global and probably not as much detail as we'll probably talk about a little bit here.
Sure. So I guess the big question that I guess we want to get into here is, with the construction industry and, it being so crucial to it, I guess what sets it apart? Why is it so much more important for construction specifically than maybe other businesses or other sectors of the industry?
Well, I think there's a number of reasons. You start with progress billings, right? It's unique trying to figure out how much to put in each bill. The bills are estimated from the 25th of the month through the 30th of the month. So you have to figure out how much construction is going to be in place the last 5 days of the month. You're dealing with estimated cost to complete, while in theory, that's not a big part of cash flow initially, but it changes the amount of cash that you're going to get in or the amount of cash that's going to go out on each project, which is a little bit unique. You're dealing with PMs that are not, financially savvy to begin with, and trying to make sure that they're educated. And I mean, PM education and a lot of different things is vital to the success of a contractor. And I'm a CPA and I hate to bill. You can imagine someone like them, what their opinion of billing is and how seriously some of them take it. Probably not the people on this call, but I also will say that, especially for some of the smaller contractors and, their sophistication level in cash flow management is not the greatest, which causes some issue. And I'm sure some of the GCs that are probably on this call can speak to it as far as how the lack of timely billing that they get into their system. So that all plays a part that makes, in general, construction by nature very unique. And then if you look at this slide, I think this really shows a better picture of what's going on a day-to-day, month-to-month, and even a year basis as it relates to construction. If you look at like the business cycle and the left-hand column up here, you think about when you find out about a project, day one, it may take, and this might be an exaggeration, there's probably longer and shorter durations, but 3 to 12 months from the time you find out a project to the time that you actually are awarded it, and maybe even longer before it even starts. And during that time period, you're paying estimators weekly, you're paying marketing practice development people to get projects. While no projects currently are, in the pipeline, maybe are being worked on. So there's cash outflow right there. And then once you get a project, and I think this is the part that we need to really think about, and I'm sure a lot of the people on this call live this every day, is, shovel and ground day one, payroll every 7 days. So day 7, day 14, day 21, and day 28, you're paying payroll. Paying some overhead stuff probably on a weekly basis, but let's just say every 30 days you're paying overhead. So day 25, you're starting to think about the bill. As I mentioned a minute ago, hopefully you're doing a very good job of projecting what construction could be in place and what costs are going to be in place through the end of the month so you can bill. And this is, assuming everything's going perfect and you got good profit on the job and all this other stuff. So day 30, you bill. And depending on your contract terms, depending on the owner, depending on a lot of different things, you're going to get paid 30 days, which is 60 days after shovel and ground, to 90 days, 120 days before you get anything in. And let's assume it's 120 days total. What, that's 4 months. That's however many payrolls, about 16 payrolls and 4 months of overhead. just on one project. So I see more contractors going out of business because of a lack of cash flow than a lack of net income. And whenever you're in a growing business that's going like this up the ladder, cash is always going to lag. And that's why making sure you know where you stand and having a forecasting tool in place is crucial for the success of a company.
Yeah, and I think everyone kind of knows that lag time on when you bill versus when you receive money. But I think when you kind of just put it simply in a chart like this, it becomes very evident that, not only do we need to be billing in a timely fashion, but we need to make sure we're covering those additional costs, even because some company, a lot of companies are going to bill on the 20th or the 25th. So we even need to consider the remainder costs of the month to make sure that we're making our money and our cash flow is staying positive throughout the length of any given project. So I think, this is always the toughest part to see, right? It's just making sure that we're staying above, all of our costs, payroll, all of our subs, all of our supplier invoices, everything. And we're teaching that financial aspect of it to the PMs because, if it's taken us 60, 90, 120 days to collect on these, we're going to be pretty far behind pretty quickly. So these are some of the things that we need to consider as we're looking through these different tools and what we can, utilize at our disposal to help with this forecasting piece of it. So I guess when you're talking about this with maybe some of your own clients, how do you get the conversation going? Like what makes it stick to some of your clients to say, this is why you need to be doing this cash flow forecasting? I know we've talked a little bit about the time delay, but what helps drive it home, I guess?
Quite frankly, I'd like to take some credit for it, but I don't think I can. It's mostly the banks and the sureties are saying, where is it? Right?
Yeah.
The banks are saying, I need a forecast. I need a plan to give you this new loan or to expand your line of credit, especially in bad times, right? Number 2010, 11, 12, when things were bad, people were in workouts. We needed to have more of a plan and a forecast that they were living on a day-to-day basis. But I get a call from the local sureties all the time saying, do you have a tool that can help my clients forecast cash? Because there is nothing out there other than Excel, and some of them are not sophisticated enough to create one that's deep down enough to make it work. So that's really what drives it. And then when there's problems, it's more reactionary than proactive is what I see. And most of my clients are pretty sophisticated too. And I still say a lot of them, and again, I probably don't give them enough credit for the formal part of it, but, are probably not as detailed as you'd like to see it.
Yep. Do you think that, I guess, some of the goods and the bads of maybe some habits that there's some of your clients have? I know we've got some bullet points here that, might indicate that someone is on the wrong end of their cash flow analysis, but talk to us a little bit about some of these items here, why these might be, cause for concern.
Well, I think most of them speak for themselves, right? I mean, if you don't have any idea of where your cash is, and I think most contractors do. I mean, if there's a problem, they know there's a problem, obviously, but dealing the middle ground is probably the bigger issue. But when cash is tight, and the problem I see, again, as I talk about when things are accelerating or you're coming out of a bad time to go up, there isn't a lot of other resources to help run your company. So you need to be on top of the cash and making sure you know exactly where it is so you can make next week's payroll. But receivables are turning over too slowly. Receivable should be part of a process that you're managing it. You're waiting till, not waiting until the due date to reach out to people. Your customers need to know the contract terms and when you expect the money. You did the work, it's your money, make sure you get it. CFMA's got some benchmarking. I know, Denver, you guys have some benchmarking. Sometimes you need to compare it to yourselves. It's hard to sometimes this topic to compare to the industry because some people work on private companies, some working on public companies, some are quick pay, some are slow pay. And so you really got to just kind of measure against yourself and make sure you're on top of what your expectations are. bills are past due and profit fade. Obviously, that's the biggest part of anything in construction that kind of drives any problems we have in cash and a lot of other issues.
Yeah, so I think, do you think that, well, we'll talk a little bit here about some of the additional lines of credit, right? What, as far as the credit lines are concerned, I'm sure just making sure that everything is being accounted for. But give us a little more insight here on what we're.
A couple of things, as we look at line of credits, line of credits are supposed to be for working capital purposes, right? To ride the ebbs and flows of your business. As things are going up and your cash is lagging, use the line of credit. But most banks want to see the line of credits paid off and have some sort of rest period for 30 days or some period of time during the year. So it isn't a permanent financing type thing. So you need to really be on top of it and make sure that you understand what it's used for, and it's not a permanent financing tool. But when lines of credits are not being renewed, obviously there's a problem there. And at that point in time, it's too late. And you're trying to go out to find other banks that, want you to be part of their team, but you got some warts on you and they're not as excited. So being proactive and having a plan in place that you're on top of, all this stuff with financial statements, with forecasts, with anything comes down to credibility. And the more you can be proactive on top of things and show people that you know what you're doing, quite frankly, the less questions they're going to ask and the more leeway you're going to get when it comes to tough decisions and asking for more.
Yep, and I think that's well said as far as, I think at the end of the day, knowing where your cash positions are, week by week, month by month, and knowing how much of your line of credit is available, right? You can start making better decisions on, do we need to utilize a line of credit, or do we have the funds to, take on and pay some of these subs, maybe even early to even earn a discount. I mean, those are all things to consider as we go about it. But
yeah, can you go back a couple of slides?
Yeah.
The reason you do all this stuff, right, is not because some idiot accountant like myself tells you to do it. You're doing this stuff to be on top of stuff so you can make decisions, right? You can determine what you want to do. Obviously, preparing forecasts, front loading billings, making sure that you're squared away with knowing when your costs are going to hit, in your schedule of values and mobilization. And one of the big things, I just did a webinar for CFMA a month or two ago, and we talked about allocation of indirect costs. And that's something that I don't think contractors, for the most part, do a very good job in general. But I also don't think they do a very good job of it when they're factoring it into the billings and making sure they're covering all their costs and it's not just hitting at the end of the project. Retainage, as we talk about retainage, and especially trade contractors, their retainage, and let's say it's 10% retainage and their gross margins 12 or 13%, they're not getting any of their cash flow positive until they get paid the retainage. So making sure you're on top of that is a big thing. We talk about staying on top of receivables, working with vendors, but I think one of the biggest areas of concern for contractors as it relates to cash management is in the change order process. Making sure that you're on top of the approval process for change orders, the process for billing change orders, because day one, we know what happens out on the job site, right? Someone tells you to do something that's not in scope, you either decide to do it, which most times people do because they got to keep things moving. So there's cash going out the door that hopefully you're going to get paid for, but making sure that your company has a change order management system that has checks and balances to make sure that people are getting them approved, getting it billed timely, getting it billed within the specs of the contract, and then in theory, maximizing the amount that you can put in a change order if it is not specified with a contract. So all these things are cash flow strategies that we can kind of go into a lot more detail at another time. But, again, not rocket science stuff here, but we get busy and we sometimes lose sight of some of these things that really make a difference with our companies.
Yeah, and I think the change orders too, just making sure that not only, are we staying on top of the approval process, but, when it relates to that profit fade or, profit gain, that as we're doing this additional work, does it make sense for us to take it on? Are we making the money that we said we're going to make? Are we increasing profits, losing out on profits because we're doing too much additional out of scope work, but those are all types of things to be mindful of. And, I think at the end of the day, it becomes a question of, do we really think that this is more a personnel issue, a lack of technology issue? Do you think it's a combination of both? I think for me personally, I think it's, it starts with having a formal, system in place that can track these kind of things, and then training the personnel how to use those tools to better keep, tabs on all this information.
Yeah, I agree. I agree too. I mean, we're all busy. We're all doing more with less. So it obviously comes down to a people issue at some point in time. But I also think sometimes you have to take a step back to take two steps forward. And, the project managers need to be trained because they're a big part of the receivables and collections, right? Because they're the people that are out there in the front lines working with, the customers and stuff, and making sure that they can have some input on when we're going to get paid. So there are a lot of little things that all add up to big things if you're not doing them right.
Yeah, so speaking of, technology, let's just make the jump here. We'll jump over into ProNovos, and we will I know a lot of people are going to have some questions, so we'll try and answer as many as we can at the end here. So if you want to type them in the chat just to have them in there, go ahead and type them in, but we'll try and answer a lot of these towards the end of this to make sure we get through everything on the cash flow forecasting tool within the platform that we can. So the cash flow forecast tool that we've put forth, I think, has been something that, well, first we have put out an update this past week, which is perfect timing for this webinar. But the big, I think, takeaway of the cash flow forecasting tool within here is to do a lot of the things that we're talking about, right? Staying on top of a lot of the payables, forecasting out our payroll amounts or additional, monthly or weekly costs, but just making sure that, like we said, those cash positions are in check, and that we know where we're going to be at a week from now, a month from now, 3 months from now. So what we're looking at here is the updated version. So it's got the charts, and anyone who's already using this, if you are, a current user of ProNovos, this will be in there next time you guys log in. So if you haven't checked it out, please, after this, go ahead and check it out. But for anyone who hasn't seen this, because you're not a user of ProNovos, basically this will connect to your accounting system, right? It'll pull in all of your cash account balances into one screen here. It'll list out all of your lines of credit that you pick and choose, and say, okay, our line of credit available balance is, in this case, $2 million. So it'll keep tabs on, here's our total, and then all the general ledger accounts that more or less eat away at that total. So you guys have clear visibility in how much cash we have on hand versus how much of our credit lines are available, right? And as we go through this, right, we'll see what our cash balances are going to be for the remainder of the year or the next 3 months, and then our net cash flow ins and outs, right? Whether we're going to be bringing in money, which weeks we're going to be spending more money, and how do we come up with these numbers? If we continue to scroll down just a little bit, we'll kind of start to see all the numbers make a little bit more sense. So we're going to start out with our $35,000 in our checking account here. And what we're considering is all the inflows. So this is generally, right, a total of all of our outstanding AR invoices. Okay, so once again, this directly connects to the ERP. This pulls in all the invoices that are listed within this total. So if I actually wanted to click on any of these and see what makes up that balance, I can click right into that number, and it'll show me a list of all the invoices that are, current or due within September 10th, right? So what this would allow anyone to do is take a look at all of our invoices, current or past due, and make sure that we're keeping tabs on them. Are they amounts that maybe we're not actually going to receive payment for this Wells Fargo job in the next month? Maybe it's an October 1st type deal. So we can actually manage these projected payment dates and push them out into different weeks. So that way we can double check and make sure that our ins and our outs are being considered appropriately. So all you would have to do is really just click on here. Not only can you just change the date, great, it'll actually give you, right, on average, it takes this job, X number of days to receive payment. So it'll actually suggest, in this case, October 1st, that's pretty good for me to not even know when we would expect that. But we can say that, we want to push this out to October 1st because that's typically how long it takes our customer, our owner, to make those payments. So all the data that is being tracked as far as invoices going out, payments coming in, it'll keep an average days to pay. And we can start pushing, right? We'll go ahead and mark this as October 1st. We can type in any notes. We can tag it with a reason, but let's just say we save that. And you'll see that that invoice is now pushed into our October 1st bucket. So I think overall, being able to manage this on a week-to-week basis, month-to-month basis, with it pulling information from your accounting system, you're not managing this in like a just true Excel sheet. Bob, I assume this is probably the most convenient piece of a tool like this, is that it's pulling right from the accounting system as opposed to, manual manipulation of this kind of data.
Yeah, I mean, I think this is a lot more detailed. Most of the time when I see Excel forecasts, it's more top end type thing with some estimations, right? And getting it close. And this is what we think sales are going to be. And these are the days we're going to collect, 45 days, and let's project it out that way. This is giving us good actual information. I do have one question maybe you can answer. So if all this stuff is coming from your accounting system, what do you do when you start projecting out into, let's in theory past 90 days or 120 days when you should collect all this stuff?
So it'll keep track, like, although if you're putting, invoices out there, or if you're using our revenue projections tool separately, this will allow you to project out for this year, next year, however, far into each project, if you wanted to go job by job and say, okay, here's how much revenue we anticipate earning each month for each job for each given time period. But that would be more on the side of revenue projections, being able to track that, into the 4th and 5th and 12th month, moving forward. So this will consider the next 3 months, right? And all of our outstanding payables, receivables, things that are on the books currently. And then as you see some of these additional categories here for anything that we want to add on top of it. If we think we're going to roughly bring in $10,000 in equipment rental cash, twice a month, we can project that out. And each time that this loads, it'll just keep projecting that out a little bit further. So it will be a 3-month look at all the information that's on the accounting books.
Okay.
So looking at things on the outflow side of things, very similarly, right? We're going to be looking at the payables, any payroll information, any additional costs that we think we're going to incur over the next couple weeks, over the next couple months. We'll be able to see that, right? Accounts payable broken out by invoice. So we can click in there, do the same thing, manage the expected payment dates on each of these invoices too. One cool thing I think to make note of here on the AP payable side is that you can actually tie AP transactions to your AR transactions. So if we click into it, we would get a flat window of what that expected payment date is going to be. If we were using the AP or AR modules, for the AP specifically, you can actually link, job A's payables to job A's receivables, and that way it'll automatically track some of those expected due dates, especially if we have some jobs that are paid when paid, right? We'll basically take the due date of the receivable invoice, tack on 7 days as a grace period, and then it'll move the date of those payable invoices into the appropriate bucket once again, right? So looking at, the full tool here, being able to track all your ins, your outs, additional costs, payroll numbers. If we know that we're going to have some, loan payments or anything else that we want to add in as far as just recurring expenses, we can toss those in on this chart. And I think at the end of the day, just make sure that as we look, we're starting here at 35 based on everything that's going to occur between the receivables, payables, payroll. We're going to end up, you know, at 800,000 in 3 months. So Bob, with that kind of information, that's where you turn to look, you know, are we paying off some loans? Are we investing in new equipment? Are we investing it elsewhere?
Right. Yeah, and I think that's important.
Yeah. So I think the, this is something that I think a lot of people, I don't know, for me, it's a convenience. It's all here. The lack of having to do it all yourself and, feel like you're inundated with data type, once again, putting it into an Excel sheet, having this information right at your fingertips, I think is always the end goal here. So, I do want to, I think we've got some questions here in the chat.
Yeah, I've been typing and answering some of them as we go because I know we're running out of time. So why don't you, here's a question that you could probably answer. Is there a place to enter projected future billings that will affect cash flow projections beyond the current AR? And I think that's kind of where I was going. I probably didn't ask it as well.
Yeah, so that would be something over in the revenue projections tool where we would be able to take, right, our current jobs and forecast out all of the revenue, right, on a job by job, month by month basis. I know there's a webinar out there on the website that we did actually pretty recently on this topic as well. So this would be something where you guys would be able to project out your estimated revenue versus actual revenue on a job by job, month by month basis.
And I think that's the powerful thing about this. Again, when I've created a couple of Excel spreadsheets for myself and my clients to do more annual monthly cash flow projections for the year. And again, it's all top end stuff where clients are giving me what their projected revenue is for each month based on what they think. This allows you to go down and do actual. And I think that is a very powerful tool.
Yep. And I think that's, I don't know, I think just having all the data there, this is, the way I was explaining this for anyone who's not, utilizing ProNovos at the moment, this isn't a separate program. It's layered on top of your current accounting system. I think that's where this makes things a whole lot easier. Is it's not recreating all this information. It's pulling it in and giving you a different view into the data that you guys already have in your accounting system. So if you're using something like Foundation software or Sage 300, all this information populates in here, and you guys would just be able to take a look at a different view of the same data that you guys have. But I think with the way that we present it, with the way that we can manipulate some of the estimated payment dates and where our cash flow is going to be at any given time, this is definitely something worth at least exploring if you haven't already looked into it.
I think that's a key point. And, when I was kind of going through and explaining some of the benefits of this, I think I got pushback from people because they thought it was an ERP system, a conversion, and all the time it would take for them to set it up. And behind the scenes, all of that is done and is taken right out of the system. Sure, you have to do some assumptions and a couple of things as we were looking at down below as far as when you're going to have some, loan payments and other stuff. But the time savings that you'll have and the more accurate information you have is more than worth it. So here's anonymous attendee. Is there a cost difference on whether or not you use the AR module, AP module, cash flow forecast? Is there an additional cost by using multiple modules? That's a question.
Now, the nice thing about that is all of these financial tools are available out of the box. So as long as you are a user of ProNovos and given that, you have the permissions within the platform to access it, all of this is included in the typical, ProNovos package.
Including, and that was another question I think you just answered, including the revenue projection portion?
Correct. Yep. Everything under financials, the WIP, cash flow, collections, payables, revenue projections. The financial statement is actually something that has been released this week as well. So all of these, as a client of ProNovos, as a user of ProNovos, all of this is included within the subscription of the platform. No additional cost for these. Basically, it's just the number of users you guys have. It's really the end thing there.
And that's the thing you keep adding on, which is great. And then final question I see right now, which again, from anonymous attendee. Any chance you can make this available for Sage 100 contract?
Yeah, we have been exploring the idea for the integrations for Sage 100 as well. Right now, we've done Sage 300. We've got plenty of clients that are using there. So yes, the short answer is yes. The Sage 100 is something on our radar to be able to integrate a lot easier. But
I think you're working with one of my clients who is on Sage 100, so I think it's going to be done here hopefully soon.
Yep, that is definitely one of the next platforms on our roadmap to be able to do an integration just like this with all the other ones that we currently have offerings for. Okay. All right, and
that's all the questions I see.
Yep, one of the other ones as far as the revenue projection portion showing for already. So yeah, if any of these are not showing, it's more or less just need to be turned on. So we can make sure that all of these options are available for anyone who is currently using ProNovos as well. Okay. Let's see. All right, and then there's a question about, do any clients use Plexus? Not to my knowledge. I don't think we have any active clients using Plexus at the moment, but it isn't something that, you know, couldn't be considered as far as doing an integration with ProNovos. So maybe that's something that that we can talk through, you know, in a separate time as far as additional software that can integrate with ProNovos. And just to make a side point, it's not only able to integrate with accounting system. We do have clients that have integrated with Procore and what's the other one that we're in the process of? HCSS, so heavy job, heavy bid. So there's estimating platforms out there that do have the capability of integrating with ProNovos as well. So just something, you know, for anyone who might be curious on that end as well. All right. Give it here another minute or two, but Bob, any final comments or, you know, concerns or just general things about the way that the software presents the information here?
No, I think it's good. I just encourage anyone obviously to use this software first and foremost, but just make sure that you have a good plan within your organization and you're always striving to be the best in class. And if you do that, good things will happen.
Yep, absolutely. And that's definitely well said. So I will, like I said, give it another minute or so here and we may wrap this thing up. And, you know, I think the next webinar that is on the docket is going to be with one of our other CPA firms from CBiz with Brian Muncie, empowering project managers with real-time financial analytics. So anyone who is looking for, you know, even like we had mentioned earlier, as far as just financial literacy for some of their project managers, you know, definitely something worth checking out at the start of next month. And, you know, we're taking registrations. So check out the website, you know, stop on by and, you know, see what we got going on then. But Bob, always a pleasure working with you guys from GBQ. We'll have to do this again here soon, but yeah, no, this is a great piece of information and, you know, definitely worth the time investment to check it out.
Thanks, Emma.
All right. So as always, you know, appreciate everyone that showed up. We'll see you guys here if you guys join us on our next one. So until next time, we'll see you later.